Today, Gemini warns DCG is at risk of default. Two crypto exchanges launched derivatives platforms outside the U.S., and CFTC Commissioner Christy Goldsmith Romero breaks down her take on regulation and enforcement action. Welcome to CNBC's Crypto World. I'm Mackenzie Sigalos. Digital currencies rising slightly this morning, with Bitcoin trading at around $28,500, Ether trading at about $1,800, and Polygon rising to 96 cents, all by noon Eastern. Okay, let's talk about the top stories. Gemini says that Digital Currency Group risks defaulting on its obligations if it cannot pay the $630 million debt made to bankrupt Genesis. This statement, posted Friday, notes that mediation is underway to resolve the outstanding issues between DCG, Genesis, and Gemini. Now, Gemini tweeted over the weekend that the creditors, DCG, Genesis, and Gemini, agreed to start a 30-day mediation process to drive to a final resolution as soon as possible. According to Gemini, the next conference on the status of the matter will be held on Thursday. We reached out to Genesis and DCG for comment, but did not hear back right away. However, Decrypt is reporting that a DCG spokesperson said the organization remains committed to doing the deal that all parties agreed to and will continue to honor its commitments on any outstanding obligations. The update comes after Genesis submitted a motion last week asking for mediation among its creditors. Next, we've been telling you that Coinbase is trying to expand globally as tension between the crypto sector and U.S. regulators heats up. Well, today, the company launched an international exchange for crypto derivatives. Here's the breakdown according to Coinbase. The crypto exchange will allow institutional users in eligible jurisdictions outside the U.S. to trade in perpetual futures. Last month, Coinbase CEO Brian Armstrong warned that crypto firms would develop in offshore havens unless rules for the industry became more clear. Coinbase is not in favor of regulation by enforcement, which the firm says led to a disappointing trend for crypto development in the U.S. By the way, today, Gemini also launched a derivatives platform for trading perpetual futures outside the U.S. jurisdiction. The crypto exchange tweeted that in the coming months, Gemini will be expanding its derivatives offering with more perpetual contracts, dated futures, and options trading. Last, the U.S. House of Representatives should have a crypto bill in the next 2 months. That's according to Congressman Patrick McHenry, who reportedly said last week at Consensus 2023 that the House Financial Services Committee and the Agriculture Panel will meet jointly this month to work on crypto legislation and will hold public hearings. CoinDesk, who hosted Consensus, said that the legislation will address securities and commodities regimes, and that McHenry thinks that such a bill could be signed by the president within the next year. Senator Cynthia Lummis also spoke at Consensus on the panel with McHenry and reportedly said that she looked forward to coordinating with him on crypto efforts, noting that the House had a better chance than the Senate at getting legislation through sooner. Last year, Lummis introduced bipartisan legislation with Senator Kristen Gillibrand aimed at creating a regulatory framework for digital assets. But so far, Congress has been unsuccessful in getting comprehensive legislation on crypto passed, even though some bills did make progress last year. All right, sticking with regulation for our main story. Alongside the SEC's regulatory crackdown, the CFTC is also weighing the best way to bring the industry into compliance. While at Consensus 2023 last week, I spoke to CFTC Commissioner Christy Goldsmith Romero about how the two agencies can work together to regulate the industry, a crackdown on mixing services, and more. You gave a speech 2 days ago in the UK talking about this idea of privacy versus anonymity in terms of regulation in crypto. Tell me a little bit more about that.
Yeah, so I was thinking about what's the worst risk right now in crypto? And it's that history, that dark history that continues of illicit finance, right? Like money laundering, terrorist financing, dark net markets, like illegal weapons, sort of all of that. And when you look at some of the cyber hacks, that's where some of the money's going to, right? So you're like, okay, you've got a lot of companies who want to be legitimate. They want to separate themselves out. Well, you have to take away that part of crypto that is so attractive to illicit finance, which is this allure of anonymity, right? That something can't be traced. So Treasury just shut down this dark net market and these terrorist financing campaigns that were using crypto. And they're basically you can donate in Bitcoin, it's not traceable, and it will be used for violence. And you're like, wait a second. So the idea is, if you want to be legally compliant in the industry, get away from this idea of anonymity. But then you recognize that people want financial privacy, right? And that's what they're used to. And you can provide privacy while still complying with anti-money laundering laws and laws that are about know your customer and laws that are to counter the financing of terrorism. But to do that, you have to verify identity, right? Who is this person? And then you also have to get away from like the mixers and the blenders that take all the different crypto and all the different source of funds and like blend them all up and mix them up so you can't tell where the money's coming from. So it's one of the things that I've been looking at and studying. And so there's this technology out there that you can come up with a digital identity, but this is like, you know, an emerging market. So I think this is an area where first the industry needs to start moving in that direction. It establishes credibility, legitimacy, it breaks apart from that dark part of crypto. And then I support Congress applying the laws in that direction. And then we're going to apply the laws as well. If we think you're on, U.S. soil or dealing with U.S. customers and you're in our markets, then we're going to require anti-money laundering laws and all of that.
In terms of those tumbling services, last summer, OFAC sanctioned Tornado Cash, and a lot of people were surprised by that move because up until that point it had been more about sanctioning individual actors versus a protocol. Does that set a dangerous precedent or one that's difficult to enforce at least?
No, I think you've got to shut down these blenders, and they're used for nefarious acts. They're used for terrorism activities. They're used to support nuclear weapons and ballistic missiles for North Korea. They're used for Russia illicit financing to get around sanctions. So you've got to separate those out and not use those. There's got to be a different way where you can still verify the identity, but not go through one of those services.
Now, the biggest question that's come up, or the biggest topic of conversation at least, has been this question of who's the regulator of crypto in the US. And it's the CFTC versus SEC question, and it's something that literally every single major player in this industry is very keen to have some sort of clarity on what exactly is falling under your regulatory remit versus the SEC. Any thoughts on that?
Yeah, so I'll first say TradFi is really used to, for all these years, having multiple regulators. So the industry, number one, needs to get used to having multiple regulators. That's just how financial services in the United States works, right? So you're going to have banking regulators as well. You're going to have the IRS. You're going to have FinCEN with these money laundering rules and things like that. You're going to have Treasury and OFAC. So you add all that together. On the securities versus commodities, this is the way it works. I'm going to try to make it as easy as possible, which is almost everything's a commodity. It can also be a security. If it's a security as determined by the SEC, it then pulls out of the CFTC's jurisdiction, even if it's still a commodity. So it's really up for the SEC to make those decisions. In my mind, it's going to be facts and circumstances. So when someone says to me, is this particular token or whatever a security or commodity, I say, well, what's it used for? What was it used for here in this specific instance? It's really, if you think about it from a security standpoint, it's not so much what it is, it's what's the promise attached in the use. Is there some promise that you're going to make money off of what others are doing? That's the how we test, right?
So did your thinking around, not to single out a token, but to single out a token, with Ether, when it went from this proof of work consensus mechanism to proof of stake, there was a utility essentially that was built into Ether and that you could earn yield by staking your coins with the network. So did that change, at least definitionally speaking, the way that you think about that token?
So let's start off with Ether is for sure a commodity, right? Because again, almost everything's a commodity, and we have Ether futures that are trading on CFTC registered exchanges. It's up to the SEC to determine whether they view Ether as security, but I'm going to tell you that's going to be based on the facts and circumstances. What is it used for? So it's funny, the morning of the merge, the merge happened at 4 in the morning, right?
Yeah, I was up.
You were up. I was going to ask if you were up. So at 8 in the morning, I was speaking at an event. The first question I asked was, who stayed up all night and do you need more coffee? But the next thing that was the first question I was asked, does this now change it? And I said, no, it doesn't change it, it's still a commodity. But I think the SEC is going to have to look at, each facts and circumstances, in particular how it's used. It's really hard to just say, with the exception of Bitcoin at this point, for the SEC to kind of declare something as a security without looking at the facts and circumstances. But I don't work at the SEC. My job is to work at the CFTC and say whether it's a commodity. For sure, it's a commodity.
One more thing before we go. I caught up with the head of policy at A16Z Crypto, Brian Quintez, at Consensus last week. He's also a former CFTC commissioner. Take a listen to what he had to say about regulation.
We've always called for regulation over the sector. The lack of regulation, the lack of clarity has really advantaged the worst actors, right? They're the ones that are pushing the boundaries. We're advising our portfolio companies to be very conservative so that they stay on the right side of now a very blurry line, which exposes the marketplace to those that don't have the same ethics and the same values to exploit that. So we're very pro-regulation. I think it doesn't necessarily matter to us which regulator has that authority as long as it's appropriately scoped to the technology, but we're not seeing that out of the SEC. We're seeing the SEC and the chair try to apply old securities laws to this technology in a way that actually kills it.
That's all for Crypto World today, but we will be back again tomorrow, so we'll see you then.